So you probably use a credit card today, right? Maybe a quick tap for your morning coffee or, a swipe for groceries. Or maybe entering the details for that online thing you've been looking at. They're just like, well, part of our daily lives. They almost fade into the background. What if I told you that behind these simple taps and swipes, there's this huge dynamic financial world, an ecosystem that's projected to nearly triple in size over the next 10 years or so? That's exactly what we're diving into today. We're digging deep into this report, the Global Credit Cards Market Forecast 2021-2033. Our mission, really, is to pull out the most important bits from this. This is a pretty dense analysis. Understand what's driving this honestly surprising growth and get a real sense of where this essential financial tool is heading globally. We're not just reading off numbers. We're trying to uncover the story they tell.
Yeah, and this report, it really is a fantastic shortcut to understanding these complex market dynamics. It's kind of a lens, letting us see everything from those huge global figures right down to the specifics in different regions, and maybe most importantly, what's actually fueling all this growth and what it means for, well, how we all make payments day to day. We'll try and connect those big trends to your experience.
Okay, let's start unpacking this with the big global picture first. When I say big, I mean it's genuinely massive. The report shows a path forward that's, well, almost hard to believe. So back in 2021, the global credit card market, revenue-wise, was about $532.7 billion, which is already, a colossal amount.
Absolutely. But the real story, like you said, emerges when we look ahead. Just 4 years later, for 2025, that number's projected to climb to $736.6 billion. And then if you look out further to 2033, the forecast is frankly eye-opening. We're talking a staggering $408.6 billion. That's over $1.4 trillion.
Wow. Just think about that for a second. We're talking about it nearly tripling from 2021 to 2033. It's not just like steady growth. It feels more like an acceleration, a real shift. But the obvious question is why? What's actually behind such dramatic, sustained global growth?
That is the critical question. And the report, it gives a pretty clear answer. It points to several interconnected, quite powerful drivers. First off, we're seeing this huge wave of advancements in digital banking and the way fintech is integrating seamlessly. This isn't just, better banking apps on your phone. It's the whole financial plumbing becoming easier to use, more efficient. Then there's just the sheer explosion of contactless payment systems. Whether you're tapping your card or your phone, maybe even your watch. These systems have totally changed the speed and convenience of paying for things. Think about how common tap to pay is now. It's fundamentally altered shopping.
Yeah, exactly. I remember when that felt kind of futuristic, and now it's just standard. You expect it.
Precisely. And we also can't ignore the enhanced security features that have been built in. Think about things like tokenization, where your actual card number isn't even sent during a purchase, or those really sophisticated AI fraud detection systems that watch spending patterns in real time. These aren't small tweaks. They're big improvements that really boost consumer trust, especially with online shopping booming. Honestly, without that trust, you wouldn't see this kind of explosive growth. But it's not only about the tech. The sort of economic background is just as important. We're seeing rising consumer spending pretty much globally, and that's happening alongside the unstoppable growth of e-commerce. More people are buying more stuff, and more of it is online, which naturally leads to more cross-border transactions too, as, buying from other countries gets easier.
Okay, so if I'm getting this right, it's kind of a perfect storm. You've got this cutting-edge tech making payments easier and safer, meeting this rising tide of consumer confidence and, well, an ever-expanding digital marketplace. When you think about your own day ordering food online, tapping your card overseas, you're actually part of these big trends. Yeah. These huge numbers aren't just abstract figures. They really reflect how we live and how we spend. That really frames the global picture well. Now, this is where, for me anyway, it gets really interesting as we start to drill down into the different stories playing out in different parts of the world, because while the global numbers are huge, the regional pictures show a more, let's say, nuanced story of where the growth is happening and why.
Indeed. And just to give some immediate perspective, let's look at the top regions projected for 2033. North America is expected to lead quite significantly with a massive $538.3 billion. Then Europe follows, still very substantial, at $391.9 billion. And the Asia-Pacific region is projected to hit $293.9 billion. These figures alone show where the kind of financial centers of gravity are now, but they also hint at the incredible momentum building up elsewhere.
Right, so North America looks set to keep its top spot. But what's really insightful, I think, are the huge contributions and growth rates we're seeing across those other big regions.
Right.
But even beyond them, it really highlights how universal the move towards credit card solutions is becoming. Let's maybe zoom in on North America first, the leader. What makes that region such a consistent frontrunner, especially since it's already a pretty mature market?
That's a great question. North America's lead is, well, it's down to a few things. There's a deeply embedded credit culture, high consumer spending power, and they were early adopters of payment tech. Within that, the United States is naturally the main engine, projected to generate a huge $410.7 billion by 2033. It really powers a lot of that regional growth, helped by a strong consumer base and ongoing fintech innovation.
Okay, so the U.S. is driving a huge chunk of that North American figure. But there's also a really fascinating story happening just south of the border. Mexico, for example, is showing this incredible growth trajectory. It's projected to almost quadruple its revenue, from around $19 billion in 2021 up to $68 billion by 2033. What's driving that kind of surge there? Is it like faster financial inclusion or maybe a growing middle class?
That's a fantastic point, and yeah, it's more than just a statistic. It's a story of real economic change. For Mexico, it's a powerful mix. You've got rapidly expanding smartphone use, making digital payments easier, a young population that's getting more comfortable with credit, and a real push by banks and fintechs to bring in people who were previously unbanked. So it's not just more spending, it's a fundamental shift in how a big, dynamic economy is modernizing its finances, bringing more people into the formal system. And Canada, meanwhile, also shows solid, steady growth, moving from about $20.7 billion to a projected $59.5 billion by 2033. That reflects a stable, wealthy market that just keeps embracing digital convenience.
Right. Okay, let's hop across the Atlantic. Europe's market size is also incredibly significant, expected to reach nearly $392 billion by 2033. It's mature, yes, but clearly still very dynamic. We see Germany, France, the UK holding strong positions. But it's also interesting that the rest of Europe segment is projected for such big growth. What does that tell us about adoption outside the major players?
Yeah, exactly. It suggests that while the established players like Germany projected at $64.2 billion, France at $56.3 billion, and the UK at $49.3 billion by 2033 keep growing steadily. Countries like Italy and Spain, which maybe relied more on cash historically, are catching up fast. Italy, for instance, is set to grow from about $13.9 billion in 2021 to nearly $40 billion by 2033, and Spain from $7.8 billion to almost $20 billion. That whole rest of Europe segment hitting $111 billion by 2033 really points to a broad, continent-wide shift in how people prefer to pay, often driven by younger people using digital wallets and shopping online. It probably also reflects how well cross-border payments work within the EU, making things seamless.
That strong growth in Europe certainly paints a picture of a dynamic market.
Right.
But the report also mentions increasing regulatory scrutiny on consumer credit in some European countries. How might that affect the projections? Or that kind of baked in already?
That's a crucial point. Regulatory scrutiny is always, well, a factor. But these projections generally try to account for the current and expected rules. European regulators often focus on, consumer protection, responsible lending. The growth we're seeing suggests that the financial institutions are adapting, maybe by focusing on clearer products or using tech to manage risk better so they can mitigate some of the potential headwinds from stricter rules. It can actually become a driver for more robust, trustworthy systems in the long run, which, funnily enough, can build more consumer confidence.
Okay, interesting. Now let's pivot to Asia Pacific. This region, already a huge economic force, is set for a really remarkable surge. It's projected to grow from about $100 billion in 2021 to almost $294 billion by 2033. That's nearly tripling in just over a decade, sort of mirroring the global acceleration. What are the key things propelling this huge growth, especially given how diverse the economies are there?
Well, this is where you really see the sheer scale of emerging market potential kick in. Within Asia-Pacific, China obviously leads the charge. Expected to contribute a massive $90.8 billion by 2033, its enormous population, fast urbanization, and a very digital-first approach to finance are key drivers there. But India is showing even faster percentage growth, growing from around $14.6 billion in 2021 to a projected $45.1 billion by 2033. That growth is really fueled by efforts to formalize the economy, massive smartphone adoption, and a booming middle class that wants convenient ways to pay. Just those two giants alone are profoundly reshaping the global credit card picture.
Right, beyond China and India, we also have other big established markets, like Japan, projected at nearly $44 billion, and South Korea at about $35 billion by 2033. And yeah, it's important not to forget the collective growth in Southeast Asia that's set to expand from about $7.3 billion to over $21 billion by 2033. It really feels like the entire region is just embracing digital credit solutions wholeheartedly.
Absolutely. The diverse growth across Asia Pacific really speaks to different stages of market maturity. So while places like Japan and South Korea have had sophisticated payment systems for a while, it's the leapfrogging effect in emerging economies that's particularly powerful. Skipping over traditional banking infrastructure straight to mobile and digital payments. That allows for incredibly rapid adoption and huge scale, bringing vast numbers of previously unbanked people into the global financial system.
Okay, now let's turn our focus to the accelerating markets in South America, the Middle East, and Africa. Grouping these together kind of helps underline the truly global reach of credit cards, extending way beyond the traditional financial hubs and showing their role in developing economies. What are maybe the common threads or perhaps the unique challenges driving card adoption in these really diverse emerging markets?
What's fascinating here, I think, is this universal demand for convenient and secure ways to pay, even with very different levels of infrastructure and economic development. In South America, the market is set to grow significantly, from about $36 billion in 2021 to over $106 billion by 2033. Brazil plays a huge role there, projected to reach nearly $39 billion itself by 2033. This growth is often tied to increasing formal employment, expanding middle classes, and just a need for better payment systems to support growing online shopping.
And the Middle East is also seeing strong expansion, growing to nearly $49 billion by 2033, with Saudi Arabia leading, forecast at over $16 billion. What's driving that in a region sometimes known for high cash use?
In the Middle East, it's a mix. You have government pushes for digital transformation, a young, very tech-savvy population, and significant e-commerce growth. Countries like Saudi Arabia are actively trying to diversify their economies away from oil, and modernizing finance is a key part of that plan. Plus, the introduction of contactless and strong security has really boosted consumer trust and usage.
And then there's Africa, a region projected for just incredible percentage growth, nearly tripling from about $9.6 billion in 2021 to over $29 billion by 2033. This really highlights the continent's massive potential. Which countries are leading this expansion?
Africa is definitely a compelling story of financial leapfrogging, as we mentioned before. Key players here include South Africa, projected at $9.8 billion, and Nigeria at $5.8 billion. What's really noticeable is how mobile-first strategies are driving this. Many people are getting access to financial services for the first time ever through their phones. They're kind of bypassing the old banking infrastructure. This fuels not just credit card use, but broader financial inclusion, making these regions really fertile ground for explosive growth. So, pulling all this data together, the main theme isn't just steady growth everywhere, but a fundamental, often really rapid shift in how payments are made worldwide. It's not just a slow climb, it's dynamic expansion, driven by fast tech adoption, growing consumer engagement, and this global push towards digital, maybe even cashless economies. If you connect that to the bigger picture, well, it has profound implications for global commerce, for ongoing fintech innovation, and just for how everyday spending happens across borders. It really shows how useful and adaptable credit cards are in all sorts of economies and cultures. They're proving they're still relevant, even as new payment methods pop up.
Which brings us right back to the key question. Why should you care about all these trends? Well, whether you're a consumer just watching your own spending habits change, or maybe an entrepreneur looking at new markets or payment options, or perhaps a fintech innovator trying to spot the next big thing, these numbers reflect really significant shifts in how money moves, how business gets done, and how societies are organizing their financial lives globally. For you as a consumer, it probably means more convenience, better security, more choices. For businesses, understanding these regional growth patterns could unlock huge new customer bases. It can inform decisions about, payment systems, market entry. And if you're involved in financial services, well, these trends point to constant opportunities for innovation. In security, user experience, cross-border payments, you name it. It's not just about the plastic card. It's about the whole infrastructure of modern economic life and where it's headed. These aren't just stats. They're kind of blueprints for future commerce and financial inclusion. So just to quickly recap, our deep dive today has shown the global credit card market is far from static. It's undergoing this dramatic transformation, projected to nearly triple in size by 2033. And this isn't random. It's fueled by this powerful mix of fast tech advances, changing consumer habits, and strategic efforts towards financial inclusion. Literally everywhere. It's a story of innovation, adoption, and huge economic potential.
Yeah, and it raises, I think, an important question to maybe mull over. As these credit card revenues soar globally, driven by digital innovation and e-commerce, what fundamental shifts in maybe consumer preferences, perhaps towards other digital payments like instant transfers or even crypto, or maybe unforeseen regulatory changes, what could emerge to either speed up or alter this path in unexpected ways over the next decade? It's a market that's always moving, and those future factors will be fascinating to watch.
A really thought-provoking question to leave you with indeed. Thank you so much for joining us on this deep dive into the fascinating and clearly rapidly evolving world of global finance. Until next time, keep exploring.